Welcome to Retail Retold, the stories behind how that store landed in your neighborhood. I'm Chris Ressa, in conversation with the people and stories shaping retail and real estate. Brought to you by DLC. Welcome to Retail Retold, everyone. I'm your host, Chris Ressa, and today I'm joined by Patrick Buckley. Patrick is a partner at Fran Dogs, a really interesting business that we don't get a lot of on this show, so I'm excited for him to be here. Welcome to the show, Patrick.
Yeah, great to be here, Chris. Thanks for having me on.
So, Patrick, tell me a little bit about who you are and what you do and what Fran Dogs does.
Yeah. So I've been in the franchise world for about 6 years. Started out as a sales rep at a company that would we'd partner with early stage franchises and help them grow. So we'd find their franchisees for them. And that's where I learned a lot about the industry. Worked there for 3 years. I've done a few different ventures since then. Started a media brand that I sold, raised venture for a data tech startup in the franchise world. Now Fran Dogs is what I started doing beginning of this year. And it's kind of like a social media content driven brokerage business. So we'll work with franchise buyers and help them find a brand they want to buy. But we'll also do sell side representation where anyone who owns a franchise, we can help them value and then sell their business quickly and confidentially. And lastly, we work with emerging franchise brands who want to grow and want to find franchisees. And we actually just officially started working with our first brand last Friday.
Awesome. Yeah. You guys, you mentioned social media. You're putting out a lot of interesting franchise content, especially about franchisors. I find it super interesting. I liken myself to what I'll call just an overall retail nerd, and I'll put franchise as a bucket in that. And I'd like to think that I know a lot about the history of a lot of brands. However, the story about KFC in Utah was fascinating.
Yeah.
That was a great one. I had no idea about that story. So anyone listening, if you're not following Patrick Buckley, please do. If you're super interested on really understanding what's going on with some of these franchise brands, Patrick's a good follow. So that said, let's take a step back.
Yeah.
What are the trends, if you were going to say what are the top 3 trends in franchising today? What are you seeing in franchising right now? What are some of the trends? And it could be from any component, however you want to answer that, what comes to mind to you, right? Someone might respond to me, well, Chris, if you're saying trends on what? Is it trends for franchisees, for franchisors? Is it trends in what types of businesses are doing well? However you want to take it.
Sure. Yeah. And I guess I'll just clarify then too that there's kind of in my mind a divide between, let's call it the legacy franchises. So your McDonald's, your KFCs, your Planet Fitnesses of the world. And then there's this whole other group of brands that are emerging, right? And that could be anywhere from they have one location and they just started franchising to, a few hundred. And a lot of the brands that you see people buying into, if you're a first time franchise owner, the brands you're going to look at is in that other category of these smaller brands that most people haven't heard of, frankly. So within that world, there's, the trends I'd say, there's a big decline, and this is more anecdotally, but in home service franchise purchases. So I'd say from 2022 to 2024, there seemed to be this gold rush of people flocking to become a small business owner. And the Wall Street Journal, Forbes, commented on that's the new way to get rich is just own a boring business. And I think a lot of people found out, the hard way that maybe it's not as easy as you would have thought.
And this is the garage organizer businesses and the
Gutter cleaning.
Serva Pro, the cleaning businesses and all this.
Not to say you can't do phenomenally, but, like, it's not gonna happen quick. It is a commodity service for a lot of those different categories across home services. A lot of times it's, unskilled labor, and then even, if it's HVAC or plumbing where it requires skilled labor, that's a whole whole 'nother problem where labor is always this constant constraint. So yeah, we've seen, like, sales and new franchise purchases go down, and a lot of, like, companies that basically make their money off of sales have, uh, done a lot of layoffs. Um, and then separately from that, another trend I'd say is, dirty soda is really popular right now. So I don't know if you've seen that in your world, but Swig, Fizz, beverages in general are on fire. It could even be 7 Brew, coffee, which, they also sell dirty soda, but this broader beverage trend is really kind of dominating the category from startup franchises all the way through to McDonald's, who's in the process of rolling out a beverage menu to 500 locations. And if all goes well, you can assume they're going to have it at all their stores.
Got it. Um, Super interesting. Yeah, the beverage category is just, whether and it's not just in franchising, whether it's Dutch Bros, Starbucks, 7 Brew, and all these other brands, Swig and whatnot, is fascinating to see. Uh, what are you seeing about with franchisees today? What's going on in the world of franchisees and potential franchisees?
Yeah, I'd say it's hard right now. Labor costs have generally gone up faster than inflation since COVID. If you're a restaurant operator, food costs have often gone up faster than the rate of inflation. Especially beef right now there's like a cattle shortage that's really impacting beef prices, and chicken prices have been very volatile the last few years. I had a Wingstop franchisee on my podcast, the Fran Dogs podcast, where he said at its peak, it would fluctuate between like 32% of his sales to it would represent 44% of his sales. So the cost of goods would swing by 12%, which, most fast food franchisees are, if they're doing the right things, they have a 10% profit margin. So that food cost that he outlined in the episode with me, I mean, that's your entire profit margin gone for a lot of restaurants. So yeah, it's really hard. And also like uh, construction costs are up as well. Um, I have an episode coming out with actually a retail developer who builds for fast food restaurants, and he just was saying how like everyone's getting squeezed, and so growth is difficult to come by when
That's
everything's
a
going to
part of
cost.
our business. That's a part of our business. We build for
Yeah,
restaurants and other retailers, so I'm super familiar.
yeah, yeah, and so it's just difficult. You really gotta, if you're buying into a concept, you want to make sure that there's going to be margin for you, and that you really have your kind of playbook dialed in, because yeah, just a lot of the operators I talk to, it's very difficult, and even the ones who are well capitalized, you know, a lot of the multiples on the businesses that you normally would be buying are just so sky high right now. Like, your a Taco Bell is like going for 10x EBITDA, which is just crazy.
So that's what Taco Bells are selling for right now, 10x
Yep.
EBITDA.
Yep.
So let's talk about this for a second, because how do you reconcile, on the one hand, you're saying that franchisees are finding it challenging to, to squeeze out more EBITDA, yet when a franchise is being sold, people are willing to pay 10x EBITDA. Why would you
Yeah.
be
Well,
willing to pay 10x EBITDA for something that's hard to squeeze out EBITDA?
it's the bigger firms seem to be buying it up. I also just don't know. I mean, frankly, it's not really. I'm probably not the best person to comment on it, but like, just because someone's buying it, like, is that gonna be a good return for that private equity fund that decided to overpay for these Taco Bells? Like, I don't know what is that doing to their IRR over the next decade? But the more expensive a price you pay, it is gonna impact your IRR pretty dramatically. The world I play in is more like your 5 to 30 unit operator, and not that, I mean, I just interviewed a 100 location owner of Dave's Hot Chicken and Pop Up Bagels and a few other concepts. But generally speaking, it's more that 5 to 30 range. So like not the institutional, like
Sure.
9 figure private equity backed franchisee. Um, and the 5 to 30 unit players, like, they're not gonna be spending 9 to 10x EBITDA. It's just crazy for them, especially when they've been used to over, call it, the last decade or maybe a few decades, depending on, the operator. They didn't have to spend that much, to grow.
What are you seeing as like average, like, you know, multiple on, for the smaller franchisee to sell to the smaller franchisee? A
Well,
guy
so
who's
it
got 3, so I
yeah.
I own 5, I'm gonna buy someone else's 5. What are you finding like that multiple is?
It's totally brand dependent, and,
Sure,
the bottom line matters too, right? So, like, once you get into, like, a lower, like, 3 to 4 million EBITDA, the multiples pick up, as the level of cash flow for the package increases. Um, so, yeah, I mean, you will that's also why, like, it's easier for bigger operators to scale, because they will be able to, like, make more, if you're at, like, 5 million in EBITDA and your multiple just went from, like, a 3x to it's gonna be a 6x whenever you do sell, you're gonna spend on something that, might be more expensive because, like, every bit of EBITDA is now getting multiplied by 5 to 6x.
sure.
So incrementally, like, on paper, it makes sense to buy more, but yeah, totally brand dependent, man. Again, like Taco Bell, I've been cherry picking, like, probably the most expensive brand out there. Like, it's McDonald's is probably like 7x. Um, but, like, I've
So is
mentioned.
there something, but like, let's just, is there something going on or about Taco Bell that Taco Bell is like the most expensive brand right now?
I mean, historically, it's like the most profitable QSR. Like, the margin profile on it is better than, uh, all the burger giants. I don't fully understand why.
That's
It's been
that
a
that that
a quest
that's
of mine.
fascinating.
I believe the cost of goods are, lower, but I also do think they have a bit of an advantage in being like a prep and hold model, if that makes sense. Right? Like, they just have all the ingredients and they can cook to order versus other ch food companies like a McDonald's or a Popeyes. They have to, like, cook and fry the chicken sandwich, and then they have to, like, let it sit there, and you hope that someone orders it. So, like, I don't know, maybe there's efficiency there, but I will say this year especially, Taco Bell's been, like, the only fast food company, to have sales go up. So your McDonald's, I think last quarter in Q2 they reported positive results, but it was like the first time in like a few quarters. Taco Bell's been going up and up and up. So
Yeah,
they,
obviously growth always helps, so
yeah, yeah, and they're just able, regardless of the environment, they have this, like, they've been able to keep a
margin profile.
reputation. Yeah, but they also just keep the reputation for value within customers. Whereas McDonald's and a lot of these other companies, like, people are very upset because the prices have gone up. But Taco Bell, like, they always find a way to, like, be creative with their marketing and their promos, and customers show up for it still.
I think people at 3 a.m. after the party are a little less concerned
Yeah,
about the extra 50 cents. That's why.
yeah, that could be it. That could be it for sure.
Um, so if I'm a when you're representing a seller, if I'm a buyer and I want to buy your client's 5 locations, and I'm not a franchisee currently, how hard is it for me to get in to do that external transaction and get approved by the franchisor, right? It's one thing to go through, like, I go through the normal process to buy a certain market, I buy that market, they approve me, but now I'm going through the franchisee to the franchisor. How is that process?
Yeah, it's gonna be difficult, regardless, assuming we're talking about these bigger food brands, or even if we're expanding outside of food to just, like, a legacy established brand, like, Planet Fitness or, other brands. It's hard because you don't have the operating experience most likely. At a minimum, you wanna be able to show that you have some capital, even if you're gonna likely acquire the package with debt, you wanna be able to show that you have, a good financial, like, a stable financial, setup. But, yeah, I mean, a lot of the franchisees you get into who do pull it off, I mean, sometimes they just get lucky with a connection and they kind of find an in with the, like, the development team at the franchisor. The Wingstop franchisee I mentioned, him and his business partners were basically hedge fund guys who knew like the investor relations team at Wingstop. And that's how they like said, hey, like, we're actually looking to buy Wingstops. Can you like help us out and like get us an intro? And like they were well capitalized. They were going to operate it, but still like jumping from a hedge fund, moving across the country to operate Wingstops is totally different. But they took a flyer on him. It worked out for him. Yeah, I mean, you want to be professional and like show up to your meetings on time. You got to do some selling on yourself and prove that like this isn't going to be a mistake. And there's often competition, which is the hard part. It's like it's pretty hard to convince a franchisor to take a flyer on a first timer when it's like if it's a good deal, there's going to be other buyers who are already franchisees because they're looking to grow. So that's really where it comes down to. And the last thing I'll just say is like some brands, right? You're just not going to have a chance. Like McDonald's. I've heard Burger King is very transactional. Like if you don't have a lot of experience and you're trying to buy like a multi-unit package, it could be tough. But yeah, there's some brands that, and then you have the opposite, like a Domino's, where they're going to be like, you have to work in the store for 12 to 16 months. Like we only sell to people who like are going to humble themselves and like learn the ropes from the ground up.
Got it.
Yeah.
Uh, the one of the things that I think right now is franchisor is dominated by food and beverage. The franchise industry, not franchisor.
Yeah.
So if you take away food and beverage, what's the next hottest category for emerging that's like growing for emerging franchise concepts?
Yeah. Well, so I mean, I had built. I referenced earlier that one of the things I've done is I built a data platform, and it was like a SaaS model. So we collected data on every franchise in the country, and yeah, food was like I think 40 to 50% of all franchises were restaurant or slash food and beverage concepts. And then the next biggest category was home services. So home services is the next biggest. And then I think it was followed by fitness. Um, and then, every other industry makes up the rest. But right now, I mean, I mentioned beverage slash dirty soda, and or maybe we'll just call it like drive-through beverage, like this drive-through-only model is exploding. Pickleball is exploding, though I don't think it's going to end well for a lot of brands. Health and wellness as well.
So health and wellness is what I'm seeing, and that has
Yeah,
legs, right? Like those
I
urgent
agree.
care models, that has legs. It's hard, there's a lot of regulatory around that make it challenging. That said, you know, I I think a lot of them, if they can figure out to scale, are going to, and that could be for humans, it could be vet. I think just generally health and wellness, I think is, it's going to take some time, but I think those franchisors are going to take some market share out of food and beverage over the next decade. It's just going to take some time.
Yeah. No, it will. And from the franchisees I've spoken to, I have an upcoming podcast with he owns I think 5 locations of a concept called Sweat House. It's like a, sauna
Yeah, I know it.
and
I'm
you know
familiar with it. Yeah.
okay, yeah. So really cool concept, and I mean, he's, doing upwards of 600K, to the bottom line on a few of his locations, which, like, to do that in a food concept would be crazy, which it can be done, but, like, Dave's Hot Chicken is doing that, and that's, like, a once in a generation brand, so, the margins are better once if you can get it to scale and pick the right market and all that, so I do think just the economics are more sustainable, the demographic trends shifting towards health are more sustainable. I think the hard part with these is, like, it's not that hard to like don't get me wrong, it's not easy to start any business, but like there's not like a real differentiator inside the 4 walls. Like I don't think there's some tech differentiator. So you do see a lot, it's very saturated in terms of the number of brands attacking this. So it's kind of going to be like a battle in every market. And there will be, I'm sure, like one I think a Sweat House is off
Yeah,
to a
there's
good.
always winners and losers, right? There's winners
Yeah.
and losers.
Yep.
Yeah, for sure. Okay. Patrick, anything else we didn't talk about in the franchise world that we should?
Oof. I mean, there's a lot, man. I could talk. I could make this a 5-hour episode if we wanted to. Um, yeah, I would just
W
say, if there's people listening to this who are like want to be want or interested in buying a franchise, don't. And this is something that I think the industry does a horrible job of. Is they promote franchises as this catch-all term for being a proven business model, but you know that varies dramatically from brand to brand. Every year there's about 350 new franchises, and uh, the majority of them, because me and my business partner, we look at them all day long. They've been operating for a few years. They maybe have 1 to 2 locations open, and they are not even close to having their systems figured out. So, evaluate each brand on its own merit. Don't fall for the marketing lines that, oh, if it's a franchise, it's going to be proven. It's still going to be incredibly difficult. Being a business owner in any industry of any concept is not going to be a walk in the park. So, yeah, just more a cautionary word there, because I think sometimes people assume franchising is this like silver bullet, and it's helpful. There are great concepts out there, and it's a very scalable way to build a multi-unit, portfolio. But it's still not easy.
Give me one nugget that, like, people might find interesting that's, like, that they don't, maybe it could be a stat, it could be a story that, most people, if they're not in the franchise world as much as you are, wouldn't know.
Hmm. Um, Trying to think. I mean, there's 3,000 franchise brands, so I don't know. I think normally when I tell people that, that's a surprise, and that's about 800,000 plus locations nationally. So
How many new locations, based on your metrics, open up in a year?
it's about 15 to 20,000 the last few
That's what
years,
I've
and there's
seen.
like,
That's fascinating.
yeah, it seems to grow steadily. Yeah, so Um, yeah, man, it's a big world. Any strip mall you go to, if for anyone listening to this, most brands are probably franchises in a lot of them. And a lot of times you don't know because most people just think it's a fast food. If it's not fast food, it's not a franchise. But UPS stores, massage parlors, you name it, like laundromats are now getting franchised more often. Most of these small business concepts are franchises out there.
All right. Well, listen, this has been great. Patrick, how do people find you?
I'm on Twitter. I'm on LinkedIn as Patrick Buckley. But yeah, LinkedIn, I've been actually a lot more active. And then we have our podcast, Fran Dogs. And, you can find us all this is available at frandogs.com. And that's FRANDAWGS.com.
Awesome. Patrick, this has been great. Really appreciate the time.
Thanks,
Thanks
Chris.
so much. What? Appreciate you watching. Hit subscribe. See you in the next one.